Do you guys see the chart? Or
Yes, sir.
yeah, okay. So what was it? Yeah, so people are getting induced again. You can use this as liquidity point in the future as well, but yeah, just take both of these in the future. Oh. And you can use this just even with this point. This inefficient price action. Okay, you're gonna have something like this in the future, you know, maybe even a break structure into this and continue down. This is how you get reversals, pullbacks. You just look at points like these, like liquidity in the middle of nowhere, you know, it's gonna reverse every time it sweeps. So yeah, this is the last buy that was possible. All right, after this, 50% of this weight. And yeah, if you're super desperate and you missed on all trades today, then this would be the last call. And after this, I don't think there were many opportunities. I mean, I can give some signal now. See.
Please answer the question whether this was a valid entry. I wanted to show you a place.
Huh? What was it?
Yeah, around this zone. Whether there was a lit
The
point
other.
for a valid buy.
Okay. So if you even miss this, then let's see. Yeah, you can. Ferdinand. Who is Ferdinand? Oh, okay. Sorry. So you can take this sell to buy. It started here, right? Buy, or even here, and you see. Oh, okay, you don't see. So you can't take this of inefficient price action. If you waited for 50%, you would get missed. You would get missed out. But you see, there was a lit point right here, as clear as day. After we broke this range, we came into the range back again, and then we continued breaking up, right? And right after this, you can take a trade of this, obviously. And if you missed even this, then let's see again. Let's use it from a structural way. This is the high, right? Lower low, lower high, lower low, higher high. This was a stop hunt. So people got taken out. Price here, and your lit point would be right here. And that's the last possible buy I see, as this was a break structure, right? Price came back into this and kept breaking up. So the last entry I would take this day would be this. If you completely missed on all this and stop loss under the protected low, or okay, this 10 pip, okay, this is not really that good, but it's still like 1 to 5, 1 to 6, 1 to 7. And if you use the projection as TP, then 1 to 4, 1 to 5. With 10 pips stop loss, by the way. So this is okay if you want to play it. It's not that risky. After this top hunt, you get another confluence, right? That this low is gonna hold, but you could have just put it here, you know, 2.5, and you would have 1 to 17. And if you held it to this point, like it's like 1 to 20, 1 to 30. So yeah. And I want to test one more thing, but yeah. But I don't think it tapped into the okay, it tapped into it actually. So this so you could have refined it to 50% as well, and like have an even smaller stop loss. But you don't need that. Okay, this 2 pip stop loss is like 1 to 50. Yeah, 1 to 40. Yeah, whatever. So what you're seeing now, you're just in the middle of build up, so you can keep stacking up buys, but we are in the extreme premium pricing. So what's dangerous about this is that you're gonna have many fake outs. Okay, you're gonna have break of structure or whatever, and price goes and then breaks structure again, and it's gonna keep inducing you into sells until it reaches some liquidity. Or wait, we went that high? What the hell? Okay, wait. Oh, this one went, okay, my bad. uh it will do this until it reaches some dangerous, some important level. So this is one, right? And it didn't top, and you're gonna see and you're gonna see maybe a pullback, maybe a fake out, maybe a fake breaker structure. You always have to check what it reacted from, you know. Pullback, you can pull back into 50%, or price can even, I know, take this low out. But I don't think that's gonna be the case for tomorrow, because you know, Ferdinand looking handsome today, yes. But what was it? Yeah, if you read the source, then in my own weekly cycle, Thursday usually are reversal days, and Friday are usually gonna respect it. So it depends on what Asia is gonna do. Obviously, if Asia does this, you know, still keeps building up, then it's gonna most probably shoot something from the left, and then you have a big reversal down. Or Asia can start building up low, sweep, for example, this low, and continue up. Or one more scenario that I have in mind would be the Asia sweeping liquidity, right? And then bam, and then you would have just Frankfurt, maybe Frankfurt, you know, respecting 50% and continue down. But yeah, I still think the rest of the week is gonna be bullish, and maybe we even reach this area. Oh no, not this one. For 1 hour, you're most probably gonna sweep this area. In my opinion, I didn't look into this, and you're gonna have a reaction of this as well. Most probably, you can take a retracement if you refine it. I didn't look into this week yet, so I don't know. And I don't know. The best case scenario for me would be at least filling this IPA up from the CPI news. But yeah, we're gonna see. I don't like predicting. It's like this looking too far, honestly. So if if tomorrow we are gonna be inside of this, expect some pullbacks. Just be cautious of that. But I honestly think we're gonna go bullish still, even next week. So yeah. So if you have any questions, just ask me, and we'll call it a day. And I'll try to make a chart breakdown for you as well, but it takes a lot of time. So yeah. So questions? No?
Yeah, I have a question, but it's not. It's
Okay.
about trade. It's about trade management. So I wanted to ask with regards to trading prop firms. For you personally, normally you say your risk 0.2 to 1%.
Zero prop firm. Okay. So for
Yeah.
challenge,
Mhm.
before I was funded, I used 0.5. But this depends on your statistics, on your data. If you trade, you should journal all your trades and count all your losses and wins. And like after 200 trades or 300 trades, you're gonna know your win ratio. Like if you have like 60% win ratio, I don't know, you can even risk 0.75. But this all comes with like personal statistics, okay? Because my win ratio is super bad, at least especially when I started the Instagram. So so I risked only 0.2 on funded accounts, but I mean the recommended number is 0.5% per trade. Yeah, this depends on your trading style. If you have like 5 pips stop loss or 7, even 8, then and you have crazy win ratio, you can even risk 1% on a trade. And what's the chance that you're gonna have 10 stop losses, 10 loss streak with, I don't know, 70% win ratio or even 80% win ratio, right? So this depends completely, and also what fits your psychology the best. If you can't handle risk that well, just risk less, you have to treat it like a demo account. So I hope this answers your question. And
it does, but one more thing. So you risking 0.2 to 1%. Sometimes I've been seeing when you post on Instagram, you use 10 lot size. So what's the stop loss you use and how do you manage it? Do you hold full volume or you partial out and stuff?
okay, I trade fixed lot size. It depends on account size, right? So if I have a bigger account, I'll go to 20 lots. And my partials, I told you my win rate is super bad because I'm trying to catch the small stop losses. But I mean, I'll always like partial after 20 pips. I don't count R's because it's useless. I just count pips, So 20 pips is good, or even use a structural point. Or if you know that there's an area that is threatening your trade. So for example, you took a buy here and you know your buy is not in the best pricing, and you know that there's inefficiency, there's liquidity above this high, and there might be a reversal that might sweep your entry, and I don't know, sweep even the lows below it. So you want to partial out at that area, that price area. So for example, it would be this buy side liquidity. It's going to be taken out 100%, right? Before it shows signs of reversals. So yeah, so you can use structural points as your, or the best thing I'd recommend is just use a buy side and sell side liquidity for your targets. But yeah, depends on where your trade is. Depends on the pricing you're taking the trade on. When I entered here, I didn't take partials like until like it was like 100 pips because it was 100% sure. I was 100% sure that it's gonna go super high. But yeah, so this is the car you guys gonna have after 3 months in our mentorship. Is it good? Huh?
Super cool.
Yeah, super. JDM? JDM. Oh, you can buy this? Can you buy JDM? Super Marca? Okay, for. Okay. Okay, so you can't buy this car, Okay, so sorry guys. Okay.
Mylan, I have a question, please.
Yeah.
Please, sorry, I'm new, folks. So how do you confirm your ranges?
My ranges?
QM on both sides?
Okay. My range is like for pricing?
Yes, please.
Okay.
The trading range.
Okay, so it's simple. It's super simple, man. You just mark a structure, okay? And you can use this on any time frame. I know traders that just do this, mark those two ranges and try to buy below this, try to buy below 50% and sell above 50%, right? So this is one way you can use it on higher time frame, and you can use it on lower time frame as well. But the way you want to use it is you can either use it on structural points. For example, you have higher high, higher low, higher high. And every time every time price is like, let's say here, you can use this as your range. Only if you know that this low is not liquidity. So for example, we have liquidity here and the low sub liquidity before, or the price is reacting to something in the extreme pricing or the floor or something. Okay, so you use a range that you know that is maintaining the price that is not going to be taken out just like that. So I'll show you an example. For example, yeah, So this was yesterday price action, okay? And we just have major liquidity, and you don't know that if this low is gonna be taken out or not until it mitigates again. And you see news respecting this this order flow, right? And you've seen it. You can rewatch the yesterday video if you don't remember. So this pretty much tells you that this range is safe to trade from. And now you just put a Fibonacci 50% on the low and high of that range. You have 50%, and this trending market, by the way. And you can take buys anywhere below this. And again, see, price just make what? Hi, hello. Okay, this is not the best way to use it. You can refine it to this. This was the last range, right? So you can do this as your internal structure, or even use this as this was the last sweep, right? And then you just put 50% on this, and buy below this one. And you can use 80% as magical number as well, which is my personal thing. It works too well for me. Okay, not this case, but I would be using this. Okay, it's like 70%, but you know, it's just below, you just buy below 50%. So there's not many examples to use here. break. Okay, so a price broke this low, high, it broke this low as well. And you're gonna assume that you're gonna have confluences, okay? You know that price just swept something from the left. You know that there's imbalance. You know there's overflow. And you set this fake break of structure as well, or whatever. And you have all these confluences, and you're 100% sure this is your trading range, right? After breaking this, you know that price is gonna reverse. So you just take 50% of this and trade off that. As simple as that. That's for trending market. And for composite structure, which means that you have order flow from both sides, and you're gonna expect you're not gonna expect something like this, right? You just want the most extreme high and low you see the market. I don't remember what day it was, and you just put it on the whole range, and you can trade it. And this can be on any time frame. I'll find you. Well, let me remember. Okay, it was like 1 week ago. Okay, so you had this composite structure right here. Okay. And you can even rewatch this. This was like 14th of September, and there's a video I broke down this, but you see, price was, there's order flow from the upside, order flow from the downside, you know, and you know, price just had this huge move, so the market is gonna be slow for a few days because it just used all of its liquidity, and now it's just gonna consolidate to collect more. So, and again, you just put price 50%. You can use 80% as the magical number, which wasn't mitigated here. Wait, yeah, you can use it like this, and you can buy and sell off above 50%. So you would catch this buy, then 50%, you would catch this buy as well as this. This is how to use it on higher time frame. And for buys, you see under 50%, many opportunities. All of this was possible. So yeah, hope that helps. Okay.
Yeah. Thank you.
Yeah, just watch the video. I explained it there.
Okay.
So, any questions? Okay.
Yeah, I have a question, bro.
Yeah.
So since I started with lit, I stopped. I don't look at structure anymore. So like before, you know, mapping M15 and all this
Okay.
Stuff. So how do you, from lit perspective, how do you look at structure? When do you, which time frames, or I don't know, how do you look at structure? What is real break of structure and higher time frame structure? Bias, you know, this, because yeah.
Okay, so I don't use structure at all.
Yeah, that's the thing. I also don't use it, and it's way better. But how? Okay, yeah.
You wanna if you don't use structure, you want to have your areas you want to buy from and sell from, and liquidity areas. That's all there is to it. Just wait for liquidity to be swept and re-enter of that. But I mean, a break of structure can be a good like tool if you use it right. If you have like liquidity sweep as your entry, then you can use break of structure as well, just to confirm it, but not as a main confluence for a trade or a direction. Because if you're gonna, I mean, you can use structure and be profitable, but for example, a Rame slit uses structure as liquidity points as well as DreamFX and many other like algo and lit communities. They just look at structure like this, you know, and they're gonna target this. And from Algo Hub, for example, I know that they are, you have higher high, higher low, right? And they just wait for price to induce one of those structural points, and they use it as liquidity, but not as a directional bias.
Okay.
So that's all there is to it. I only use ranges to trade from, and like POIs, you know, not even a POI, just a whole range. I just take this whole thing and wait for what happens, then look at the left, what it reacted to, and you're happy to go.
So it's just liquidity taken and then liquidity target.
Yeah, exactly.
Yeah. Okay.
That's my whole, that's like my whole bias. Like you see, liquidity building up, liquidity taken, liquidity taken, and then liquidity target, right? And you just buy.
Yeah, makes sense. Yeah. Okay, thank you.
So no questions anymore. Okay, so let's call it a day here. I'm gonna send the recording later, and we'll see. Yeah, tomorrow is Friday. Okay, I'll see you guys tomorrow.
Yeah.
Good night.
Thank you. Good night.